Okay, good morning, everyone, and welcome to the European crossover webinar. We did see the expected tariff announcements for the administration announced. They were announced well after the New York close, but we did go and see an initial dollar pop on that news. And then we kind of gave back a little bit, then we reassumed ourselves with a little bit further movement in the dollar. And it's been a bit of a mixed bag. You can see here that the euro popped up above 17 after this move here, and just a general pullback, and then we assert ourselves, and then we turn around and we start to slide back. So it's a bit of a mixed bag right now here as far as the move off the tariff. We certainly did see the dollar languish yesterday. That was something that we were expecting. Let's move this out of the way. As we had mentioned, we were looking for the dollar to go in and continue to sell off based on this little pattern that we had. And we mentioned about the 95 being a key resistance area. And that did go and hold in place actually into the Sunday session, rolling into Monday. And then we just saw a continued deterioration in the dollar. Although it held near its lows, we didn't get, thought we might get the trade news or tariff news during the New York session. We did not get it during the New York session. That came in well afterwards, and then we saw a little bit of a movement in the dollar. Not a whole lot. My thinking is, if you look at this overall, it's the old I'm trying to think of the right word, but there's less reaction each time. It's past the point of diminishing returns. And every time we get the this tariff talk, we see this huge move in the dollar. And we saw it here, and then we saw it here, and now they announced the news, and it was just a very tepid response. The dollar did move higher, but it was only slight, and then we ended up losing. We're kind of like edging back a bit. So it looks like to me, we're just wondering at what point is there going to be a tipping zone for the dollar, and then we really start to make this move lower off of this pattern that we had in place. It really started around Thursday of last week and is basically held true. We were talking about any sales against 95. The only thing that would invalidate that would be a 2-hour close above 95.32, and we have not been able to get that. And since then, we've seen this market continue to go on and rotate lower. And then the news off of the trade line news, you have to wonder, wait a minute, was there actually news? Yeah, there was. We saw a little bit of a move higher, but not a whole lot. So you're starting to see the market's becoming, it's the boy who cried wolf to a certain extent. It's just getting tired of that. It's just not really seeing much movement. That being said, it did go on and take its little bit of a toll on the gold market. We did go in and see here with the gold market that we were, when we talked about that, and we'll get into when we get into the bias chart, but we talked about this yesterday. We said we were on the precipice right here at this key support at 97, and we said that the market needed to get a 2-hour close above 12.04 to stop the bleeding, and hence we did. And then we talked about the key 12.07 area, and this market got above that, and then as the day went on, we finally started to fade. And then we took a dip down here, which actually came in around, I think it was a 78%, and we've tried to work a little bit higher. If you look here, we've actually reclaimed the 12.04 area here. So why these levels are always so important. I always, as I mentioned, I always like to look at the body closes on that. So there we go. Just trying to extend this out. And just as I mentioned, a bit of a mixed bag here with the euro. We did move higher, and then we've turned around and eased back a bit. Just really no real sense of, I want to say, in a sense of no direction. a sense of no direction. But once again, that being said, we're above here. I still consider this pattern, as I said yesterday, overall bullish. It was just a matter of how far would it go in and pull back. I thought we might be under a little bit more pressure when we came in Monday morning and then work higher. We actually held up overall, and the market just kind of vacillated in a very, very tight range. Overall, I think it's still bullish because I think the dollar is going to have to work lower. That's why. Sterling ended up giving up her cable. Just about made it to that 31.70 area here. Oh, wow. I actually see this. That's exactly what it went to. We did make it up there. Hold on. The high being 31.70. That's our area right there. 31.70. I didn't even know that it did that overnight. There you go, 31.70, off by half a pip, 31.70.5. That's our intermediate target right here. If you look at the analysis, this is from last week. This was our area here that we were talking about. See what we had our, but our target is, remember, it's 133 with a pause at, oh, there you go. Market attempting to break out a pivot of 36.56, resulting in new bullish momentum. Buy a pullback to 29.73 with trade invalidated if we get a 2-hour close between 29.32, with a target of 33.17, which is 38%, with initial pause, at 31.70. And there's our bias resistance, 31.70. And as you can see, on cable, we made it right there to 31.70.5. But like I said, if you, with the ForexAnalytix, you had access to this, and we were already looking for this move. And that's what we're talking about here, is our resistance was 31.70. I didn't even know that it even made it up there. I haven't done much with the cable over the last week or so. I think early last week I traded a little bit for a move, but nothing a whole lot with cable. So it actually turned out pretty good right there with our, so we've reached our intermediate target, our initial pause at 31.70. We'll have to see how much further back that we get from that. Let's go in and take a quick look at the news as we do, just a quick overview. News is slide. Australia and New Zealand dollars prove resilient to well-flagged trade risk. You can see here the Aussie dollar trying to still work a little bit higher. Australian and New Zealand dollars took only a brief knock on Tuesday when Washington made good on past threats and announced tariffs on $200 billion of Chinese imports, with the risk so well flagged that losses were fleeting. We just talked about that. The RBA used minutes of its September policy meeting to warn that protectionism was a material risk to an otherwise upbeat outlook to the global and local economies. The bank also welcomed the modest decline in the Aussie, said to be support economic growth. If we're right in thinking that the economy won't live up to the RBA's hopes, then a rate hike may still be 2 years away, said Paul Dales, head of Australian economics at Capital Economics. They're a great group. They do excellent analysis, Capital Economics, if you're familiar with them. The Kiwi dollar firmed to 0.2 to 65.91. It had flipped higher when the New Zealand Prime Minister Jacinda Ardern suggested she had been given a hint that domestic data and economic growth this week would be pleasing. The GDP data are due out on Thursday, and economists polled by Reuters predicted a growth of 0.7% in the second quarter for an annual expansion of 2.5%. And on to sterling. Sterling pulls back from 6-week highs ahead of the EU summit. Sterling has rallied around 4% from 2018 lows in mid-August when fears Britain would crash out of the EU without a trade deal spooked investors. Although November was cited as a potential date for a deal, that the reality is there is still a lot more to be discussed and a huge gap between the warring factions of the Tory party, said Joan Foley, FX strategist at Rabobank. Rob said that the government's proposal in the post-Brexit border between the British province of North Ireland and EU member Ireland, one of the thorniest issues in reaching an agreement, was the only credible one. Germany's Spiegel Online reported on Tuesday. While we are GDP bullish ahead of the Salzburg EU unit, we hold back from selling euro pound. Instead, we trade our bullish sterling call against the dollar and China focused odd, Morgan Stanley analyst said in a note. And on to the dollar. Dollar falls for a second day as the trade war escalates. The dollar fell for a second consecutive day, and the euro gained on Tuesday after President Trump escalated his trade war with China, imposing 10% tariffs, with Beijing keeping a firm grip on the Chinese renminbi in the aftermath of the latest measures and refusing to let it weaken below a January 2017 low. China's playing a steady hand on the currency front, and the news flow out of Europe continues to be positive, which helps European currencies, said Alvin Tan, currency strategist at Societe Generale. The dollar's knee-jerk reaction has subsided. We just talked about that, and somewhat as some equity markets are managing to rise despite the trade news. It appears that a consensus has already been formed beforehand on what the trade amount announcement would be, said Shasuke Yamada, currency and equity strategist at Bank of America. Against the euro and the greenback, was up 1/10% to 17.17, while the Swiss franc was trading at 6-month highs against the dollar at 96.05 before a central bank rate decision this week from Switzerland. On technicals, the outlook is cautious for the dollar after it fell below a 100-day moving average for the first time in 6 months overnight, or roughly around the time period when concerns about the trade war hit the spotlight. And some interesting news from BlackRock. I posted this in the ForexAnalytix room. BlackRock, the world's largest asset manager, has moved recently to a long position in Italian bonds. Deputy Chief Investment Officer for Fixed Income said on Tuesday, Scott Teal told reporters the fund had held a short position on Italian bonds earlier this year, then shifted to neutral, and then more recently had gone long on the market. He said Italian bonds were tactically valued compared to Southern European peers. Teal also said he had recently turned more positive on the British pound, seeing its near-term direction as higher. It does appear that the Brexit situation has become more positive, he said, and that a level of 135 was not out of the question. It should appear that Britain would reach an agreement on exiting the European Union next month with a trade deal in place. And lastly, Eurozone periphery bond yields. Italian government bond yields held near flat on Tuesday after tensions between the government officials on 2019 budget appear to reemerge. Financial markets on edge about the government's spending plans. Source said that both De Maio and Salvini wanted a deficit between 2 and 2.5% to help pay for some main electoral promises, including the introduction of a universal wage. The moves reversed some of the declines triggered in recent days and early on Monday by reports that the economy minister was set on preventing 2019 budget deficit rising above 1.6. The meeting was not a game changer, but it's enough to introduce some two-way risk, said Antoine Bouvet, rate strategist Mizuho. Investors will be asking, do I want to chase a rally now, knowing that a large chunk of the good news has already been priced in? Recent weeks have seen a recovery in sentiment about Italy after top officials said the government would respect European Union rules on fiscal discipline. This would certainly be good news for Euro bulls. The market beholden to headlines. There's a clear tension between the main parties driving these and how they will get there, said Matthew Kames, race strategist at Rabobank. So let's go on and move in now to the bias chart. So let's go and take a look here with the euro. We had a pretty tight resistance yesterday. We weren't sure if we were going to be on the back foot going into the New York session with the announcement of the action or additional tariffs against China. We did get that. After the New York closed, and it had a very limited reaction. We still believe the euro to be positive. We weren't sure if we were going to get further selling, going into the New York session. That actually did not come to be. We'd actually had rallied, and then we ended up holding here. The 1620 ended up being a very good place. We had 1606 as an area where they could potentially pull back to. Although, like I said, we've moved higher. We haven't taken off yet. So I think, the door's still open that they could possibly move higher. But at this point, we certainly have not moved higher. Market's still kind of sticking around and kind of wonder where we're going to go at this point. The Italian situation, once again, it's been relatively good news of late. When we look at where we are as far as support, like I said, I'm kind of curious here. Is that this market could easily have pushed above here, but the trade action is rather limited. Let's take a look at some news also. The only thing we have coming in into the States is going to be Canadian manufacturing sales. That'll be at 8:30 Eastern. And we do have NAHB housing market. So news is fairly limited today. Obviously, we have API oil stocks, but that's going to be after the New York close. So rather a news-free day for the most part as we come into the States. And we already had the announcement of the trade tariffs. So let's take a look where we stand. At this point, you have to think bulls don't really have control, bears don't have control, but there is a bullish bias, although mildly bullish bias. This was a tough one, I think, here. I think you want to still play the euro from the bullish side. How much further? I guess it's in the sense, bulls have to be a little bit disappointed that we weren't even able to add on to further gains. But once again, I think that the dollar is susceptible. I think we may be in a holding pattern before we can just move higher. So where do we come in? Where's the support? Let's take a look here. I would venture to say right in here, you should see some decent demand. Right there at 1644. 1644. You can see that all the support coming right across here. 1644. Resistance you see this coming. Resistance is actually going to be right there. I'll show you coming across these body touches. See right here? Right there. That's going to be resistance. Actually, that's where they ran out of gas, right there. 1717, which was today's high. So you can see how significant these closes are, these body closes and opens right there. 1717 is the resistance. Obviously, that's where the market ran out of gas this morning. We'll still keep this in a range, although I think this is mildly bullish. Now moving on to cable. Well, this is it, our intermediate target. If you remember, we've been looking here for a move to 133 and we'll show you on the 38% with a pause at 31.70. There's our bias chart resistance at 31.70. This is our intermediate target. We're looking for an actual move here on the sterling. We pointed out the analysis, and we're looking for a move to 33.17 to 38%. Okay, but we said there was going to be a pause. We're looking for an initial pause at 31.70. Here's our resistance at 31.70. And it went to 31.70 and half of a pip. So it took out our bias chart resistance and our intermediate target by half a pip. And then we saw a good 50 pip sell-off after that, right here. Good 50 pip sell-off. So it kind of, we've reached that intermediate target here. We hit it early in the European session. So probably have to go in and pair back at this point. After hitting that intermediate target, we'll keep the 31.70 as our intermediate target, which is placed, but we'll probably have to take a bit of a respite, because we've reached that intermediate target. Doesn't mean you go bearish, but after hitting our target is 33.17 to 38%, we'll move this here. There we go. With an intermediate pause at 31.70, and you can see the significance of this level. You see right there, all these touches coming across, hence at 31.70. And our intermediate target. At this point, the market might be open to a little bit of a pause. Thus, let's take a look. We're going to go right there with 30.80. 30.80. I think there's a bevy of support from an intraday basis on the way down, but I think we're going to move that lower here. We're going to actually give it some room in case, because we had such a phenomenal run that if it needs to take a pause, I'm going to go right there with 30.72. 30.72. Because we've had a pretty good run. It's reached our intermediate target, which was 31.70. So a pause would not be unexpected. So we're going to go with 30.72. And we're going to keep our resistance, bias chart resistance from yesterday, which is our intermediate target, which was hit right at the edge or right just before the European session started. Let's go move in now to the Aussie dollar. Now, our resistance was 72.08, and we came up with that right here, right there. Just a hair above that. Come right across here. So give us a 72.08. We hit that. It started to respond well despite the trade news or tariff news. So there's a possibility we can move even higher. And that may take place if we start to see the dollar rotate lower, which that's really what I'm expecting. And if we do see that, and it may not, I don't know if it'll materialize today, it may materialize tomorrow, then they're going to shoot for this target, I would believe, which would be 72.55. So The market's so oversold, I don't think you want to get in the way of it. Doesn't mean it's going to take off to Venus, but it certainly has had a nice little rebound here, and I think it's beginning to open itself up to a further correction. If you look at it, look at this. It's got a long ways to go. So getting to 72.55 is not that unreasonable, but certainly that would be the target they'd want to go to initially before you see a bit of a pause. So we're going to give it some room, and so our resistance for the Aussie is going to be 72.55. Obviously, still bearish. Support. We're going to go right there. 71.66 for support. 71.66. And still bearish. And let's go with the Kiwi. Well, we had 66.07, and you can see the market made it to 66.08. So it took out our resistance by 1 pip. And same thing here. I think we're open to moving a little bit higher here, especially if you see this dollar correct. So that worked out so far. But I think that this is where we'd want to go to for our resistance here. It's where the market will target. You can see that level coming right across here. So I'm actually going to move this here to 66.35 on the resistance as a target initially that they would try and move to. They haven't climbed too much. We may even get beyond that because it doesn't seem that far away. Or actually, if we get a little bit of a dollar pullback, we're actually going to make it right there. 66.59. 66.59 looking out. Although this has worked out, took it out by 1 pip. Still going to be bearish. So as if they do get some good short covering, we start to see the dollar unwind further. That'll be the target for them to go to 66.59 on a short-term basis with support here on the Kiwi. That worked out well, but this is what we'll be looking at. There we go. Support will come in right there. 65.53. 65.53 right there. So just moving that support up just a bit, 10 pips. And with that, we're going to move into the dollar CAD. Now, we did see a little bit of a bounce here in the dollar CAD, and it has certainly relinquished that rally. Let's go and move this into a 2-hour. put it too much. Hold on. There we go. So we saw a little bit of a pop back here in the 2 hour here on the dollar CAD, but we kind of paired back. I mean, what I'd be looking at if we saw a possibility, someone's asking about that. To me, the optimal area still remains to sell this would be between 31.10 and 31.25. Look like they may get a little bit of a bounce. They started to move higher and they kind of slid right back below. Kind of in a wait and see. The way I look at the dollar CAD, obviously it's beholding to these NAFTA headlines and probably a little bit of a kicker on the trade tariff news. But as I mentioned before, I think we're just in a same thing in a sense with the euro, but a little bit more defined as a holding pattern here. But I think certainly has been baked into the cake is that they're going to be looking to go and sell this thing on any rallies. It will take some time for this to resolve itself if it was going to try and move to the upside. I don't really see that happening here, but we're trading in a very, very tight range here. Probably might be probably a better way to look at this market. Probably have to be on a shorter time frame, on a 30-minute if you're looking to try and move in and out during the day. It's not that far. We're trading in such a tight range here, and these are 30-minute bars. You would think they were 5-minute bars. You see a lot of volume coming across here. I'm going to go here with this 30.72 for resistance. If they pop back up there, they may struggle, but it's not that far above these highs here. You know what? We're just going to come across right there, 30.77. Still a ways away, 30.77 for resistance, but I think the dollar CAD's a little bit of a tough one right now to get a good feel on. We did have 30.73 for our daily resistance. This came up short of that. We're going to move in an extra 4 pips. As far as support, you can see the touches coming across. And that's all volume coming across there. That's going to be 30.05, and we're just going to mark that off as our support for right now, 30.05. Obviously, if the dollar starts to unwind or we see some additional momentum, we could go on and break lower. But we do have an area here that we were looking at that we thought we may eventually get to, and the market held up well, not break into that area, but I thought we might make it down here to the 29.66. So we've held okay. If the dollar rotates lower, the dollar index itself, we could see that move down there. But for right now, barring that, I think we may be at least another 24 hours before that, but for today would be that 30.05. There's that 29.63 we were talking about. But for today, right now, we're going to keep it relatively tight, 30.05. And with that, let's go and move into the dollar Swissy. We've come off quite a bit here in the dollar Swissy. We actually came into some very key support here. right there. We had 96.16. Mark actually initially found some support there, and since then we've taken a dip, coming right into the 96, and right now we're here at 96.23. Let's take a look at this. We've also come into the 50%, so right now you can see where that body closed and then open right there at 96.05 and a half. We're going to use that as our support, 96.05, but I like this area down here for the dollar Swiss. We can take a look at that on a daily. Right here, you can see this 96.28. Actually, it comes in 26, but that's the 50%. And that came in this 96.23. We just moved that support level to our support, bias chart support, 96.16, which actually initially held the market. And then obviously we came down here in European trading, pushed it down to 96.05 or 04 before starting to move higher. Actually moved even a little bit lower than that. Got as low as 96.01 and a half. And when we're looking at resistance on the upside, for right now, it's going to be 96.41. Initially speaking, but your real volume comes in right there. These touches, it's going to be actually, I'm going to move that up here. 96.54. That's what we're going to go with, 96.54. Before you see some initial, right here you'll see a little bit of a blip, but the actually is going to come in 96.54 on the dollar Swiss on the upside for resistance. Obviously still bearish. There we go. Now it takes us here to the dollar yen, and this has been interesting here with this pair. We actually just about made it up here, this 12.23. We dipped down to 11.66. One of the things that we talked about yesterday, I'm still a doubting Thomas on this dollar yen, but we said as long as they're above the bias pivot, which is 11.66, it's bullish, and the market started to slide back as U.S. equity slid back and bonds recovered. That's one of the things we talked about, is that despite the weakness in bond futures, which would be higher rates, we haven't really seen that translate into significantly higher dollar yen. And then, of course, with equities being so high, as they started to pare back a bit yesterday, that weighed on the dollar yen. And you can see here we made it right back to our bias chart, our bias pivot. Our pivot, and that's 11.66. We talked about the significance of 11.66 coming across, and that's exactly where they found support at, 11.66. We put our bias chart support here at 11.48, but the importance of the 11.66 is, look, I respect the technicals as long as it stays above 11.66. Excuse me, and the low was 11.66 and a half right there. This should actually, this bias pivot should be just a little bit lower. Let's move this down here to reflect that. That's 11.66 right there. So he got to 11.66 and a half pip. and you can see the market rallied back on that news. There's also some news out of Japan in regards to the BOJ, and there was some reference to a story about, whether or not they should start to look at winding things down. But the talk was, if we do that, then it could really make the market, throw the market in a bit of a tizzy. Did see some news here. Italy's 5-year government bond yield falls to the lowest since July 27th. So things continue to look a little bit better here for Italy. But once again, as long as it's above that. But that being said, I still have question marks here on the dollar yen. But certainly the comments regarding the BOJ are certainly supportive for the dollar yen in the sense that they weigh on the yen. So I'm still going to stick with this 12.23. Not going to go in and change that. We did make it up to 12.30. But I like that 12.23. Now, looking at it from a technical standpoint, you see what this body close was? That comes in right there, 12.20. Well, there it is, 12.22.5. There's our 12.23. That's exactly where the resistance is. So that stays the same. We're going to keep it 12.23 for resistance. I'm a bit of a doubting Thomas on this dollar yen, but we said as long as it stays above the bias pivot of 11.66, then have to respect the technicals, although I just don't really believe in this market at this point, but it has come back. But if you look at it, one of the things I looked at yesterday with the euro is, if you look on this bar, it's essentially gone 50 back on the bar. And generally what I like to do is, you see a big bar like that, I'll go from the actual bar, not the range, on one specific bar. So we take a look at this. Actually, we've gone a little bit further than 50 back on the bar. The actual bar right there. Just beyond. Actually going the wrong way, but still going to be the same. Still doing it the wrong way. There we go. There's 50 back on the bar. So we got past that, so I'll give it that. So maybe just about 61%, but because generally if you see a big bar like this, which really that's a engulfing, although for some people they want to engulf the entire range, as long as it engulfs the body. It was just right there with the body, and look for 50 back, but we'll see what happens on this. But I got a big question mark here on this dollar yen, but certainly the comments coming out in regards to the BOJ certainly did go on and provide some support here for the dollar yen. So for me, no changes, 11.48 and 12.23 on the dollar yen. So let's move into the cash dollar index. We'll see gold starting to move up higher again. Well, to me, it's still the same thing. No changes here for the buck. Obviously, suspect or held hostage by the news. But to me, it's all about this bar chart, this formation right here. And what I did was I just took this same line, moved it lower, and that gives me 92.80. And from a little bit longer term perspective, that's what I think the market is going to go to or correct back to, 92.80. Whether it does or doesn't, we'll find out, but I'm thinking 92.80. And with a pause at 93.72. But the market's staying stubbornly high. But as I mentioned earlier about past the point of diminishing returns, that's what we're getting right now, I feel, on all this trade news. It used to be every time they talk the trade news, we'd get some big old fat dollar rally or a pretty good sizable rally. And we saw that the 2 Fridays ago, and we saw that last Friday. And now they announced the tariffs. And boy, we got like about 20 pip rally, if that much. And now we're kind of like just barely hanging on. So it's just, you know, even if you're bullish, you're thinking, wow, what happened? You know, what happened to my rally? Shouldn't I be getting a rally? Didn't they announce the tariff news? So we're starting to, you know, the market's just starting to become immune to that this whole tariff news. And how many more tariffs can you announce? I mean, the market's just getting a little bit tired of it. It's just losing its effect, becoming immune to it. So I think we're susceptible. I'm not sure if it'll happen today. It may happen today. But I think the dollar we may finally start to see a good slip, whether it's today or tomorrow. We'll see. In the meantime, I'm going to stay with, in case we get a move here. And that's at 95.02. Nothing's really changed on the dollar index. We said that yesterday. I like the idea of selling the dollar. And the only thing that's going to invalidate this is a 2-hour close above 95.32. That would invalidate it. It doesn't make it bullish, but it would invalidate the move at that point. If not, I still see from an intermediate term, I'll move to eventually, potentially a move to 92.80 with a pause at 93.72. So no changes there. And support, I'm just going to look at 94.27 for an intermediate support. We could slip, so let's take a little bit further look because we're much closer to this now. Just one moment. You know, we may get a pause at 24.7 for this now. If we do slide, I want to go with this 94.09 because I do think it's susceptible. So I want to go with move this support down to 94.09. Certainly, gold's acting like it wants to move higher based on what's going on here with the dollar. And what I've been noticing lately, or last day and a half, is gold seems to be, I don't want to say front running the dollar, but front running expectations of a dollar move. So now it looks like gold's acting like, oh, I bet this dollar is going to slide further. That's how, I mean, the way I look at it. But I want to move the support down to 94.09. There we go. It's still got to respect the technicals, just like we said, dollar yen. So overall, the market's been bullish, but for right now, it's in a range. You see that? We're going to have to break much slower before we could say, okay, now it's starting to turn bearish on a very short-term intermediate type basis. Now let's go and move into the gold market. One of the things we talked about yesterday when we came on, remember, we said we were, and we showed that on our analysis here in the ForexAnalytix. And we said we're on the precipice of key support. 97 on the horizontal support, 97 on the trend line support. And it was going to be make or break here. I was saying I still liked it overall from a longer term move, but certainly the bulls have been put on defensive on Thursday's action, which rolled into further pressure on Friday. And that took us into where we were Sunday evening, Monday morning. And we've responded. We were talking about that it would need to get a 2-hour close above 12.04 to stop the bleeding. We did get that. And then we said the next key area was 12.07. That was the daily breakout area. And certainly they actually made it up to 960, but eventually they did go in and fade into this, made all the way down here to 78% of this move. I'll show you. Gold loves to trade on the technicals. You see that? Exactly to the 78% before sharp retracement back. But don't forget, one of the things it had already done is it had held against this 1197, and we had gotten past the 1204. So anyone that was bearish on a short-term basis would have to respect that and say, okay, you know what? Let me, I can't be short until we get another break beyond that. So you can see they defended that, and then we're actually moving higher, and we're actually above 1207 right now. So for right now, for support, at this point, we're going to go with 1203. Let's move it $1 below this key, 1204, give it a little bit of a room. So support right now will be 1203. We're able to move this up. for resistance, well, if the wheels fall off the caboose for gold, I mean for the dollar, and that's a possibility, but I think sometime within the next day or two, we should see the dollar start to break lower. Because as I mentioned before, is we're getting to a point where the market's now becoming immune. And we had good reactions on this. I'm going to throw this many tariffs on there. Okay, another rally in the dollar. I'm going to throw more tariffs on China. Okay, another rally. And now the announcement, and like the market just moved like about 20 pips. So now the market's like, you know what, I'm immune to that. You know, next. So I'm saying that's how the market's reacting. So if you've been bullish, or the market's been bullish, and it has now broken out of this pattern, and it's opening the door for, at least in my opinion, it's opening the door for a move. Then at this point, then the traders get you get this initial break, okay, and then we get this rally. And we're like, okay, well, once they make this announcement, the risk is really that they're going to really start to move up in here. But that didn't take place. We got the actual news. And you can see here, I'll give you an example. Let's move here. Look, I'm going to announce a bunch of tariffs on China. Nice rally. I'm going to announce a bunch of China on rally. Okay, decent, okay, not as strong, but pretty good close. Here's the announcement. Whoa, dude, where's my rally? So you've already broken below here, and they make the announcements, and you get like what, a 20 tick rally? So my point is that we've already broken below, and so anybody that's bullish is saying, wow, I'm not getting any more rallies, and now we're actually starting to weaken, and I think you can start to hit some stops, and that'll open the door for us to move lower. Our initial, I'm looking for a eventual move down here to 92.80, but I am looking for a pause at around 93.72. So I'm thinking we can still break another 50 to 70 pips right here before we start to see some, maybe a little bit of covering. So you can see it's already continued to weaken. Euro, look at that, euro's now above 117, and gold, as I mentioned, it seems to be front running. You see here, and look at this nice wick right here, this hammer. Right, it hit the market, went to the 78% of this move here. Yesterday's we knew we had to defend 1197, so 1197 to 1209.60 went right to the 78% with a nice strong hammer. It's really opening the door for a move higher. And to me, it appears like gold seems to be front running what it believes is a move in the dollar. And certainly, like I said, anyone who's bullish the dollar has to have been disappointed after that Chinese tariff news. And you got what, about a 20 to 25 tick rally. As I said, the old movie, Dude, Where's My Car? Dude, Where's My Rally? So on the upside for gold, resistance, it's got to be this key area here, 1213, right there. Actually, probably even a little bit higher, because if we blast past 1209.60, and the dollar starts falling apart here, it's going to be right there at 1215. That'll be the resistance, 1215. It's got to give it that room here. It's already front running the dollar to a certain extent. Not front running, but front running in the sense of expectations. There's our 1207 yesterday. We mentioned as key, the daily breakout. So be wary, don't get in the way of gold, especially if this dollar starts to come apart. And the same thing with the euro. The euro is certainly acting like it wants to move higher. And we could start to see some liquidation of these long dollar positions, because the market is just not responding any more positively to the news. And which, we thought announcing what, another $200 billion in tariffs. I mean, where's the rally? You know, the old saying, the old saying from the 80s or whatever, where's the beef? 30-year bond, well, we're still languishing near the lows, which is one of my concerns about the dollar yen. It seems like the dollar yen ought to be in better shape. We had 41.05. The low here was it 41.06 or 7? 41.07. So we're going to keep the 41.05, and I want to keep this 42.02 also. And we're just about the end of the show. Let's go move into the bunds. Well, we had 58.84, and that was actually the low tick yesterday, 58.84. And that just happened to be a level that we saw there. So I think we're pretty well overdone here. So we're going to actually move that support to right here. You see these touches coming across this on a 30-minute chart. So it's going to be 58.95. We'll let it take it out by a tick if it does. So we'll go 58.94. Resistance. Right there. $59.29. That's resistance. Let's take a look here with the DAX. Actually, I don't know if we're going to make it up to this high. We actually made it right into this level here. Resistance is just going to come in right there at this body, 12.166. You can see that, 12.166. And we're actually looking at this on a 30-minute. Let's see if we can find something here. Nothing per se I can see any significance. This market is so beat up. We are holding that 12,105. We're back above it. So here's the key right there. It's going to be just below. Right there. That's going to be key for it to hold. 12,050. I think we're in a safe area. We're holding the 12,105. We're actually just going to give it just a little bit of room. We'll say 12,087 in case they take a stab just below that. But it needs to hold that. It actually comes in right there. I'll show you. It really needs to hold this area. If not, we just rotate lower. It's going to be 12,083. 12,083. It'll be just a second. And there's the bias chart. And that takes us to the top of the hour. And if you want to go and print that out, we're all set for the day.
Hey, Paul.
Hey, Blake, how you doing?
Good morning.
Hey, good morning.
Man, I'm trying to make 2 cents of what's happening, and just as you were talking about the dollar is going to weaken, I don't know, about a half an hour ago, the euro dollar screamed back up. The dollar did come under some pressure. One of the things that you were talking about is, you know, with all these, you know, with all these new tariffs, why hasn't the dollar responded? I think right now, one of the reasons why the dollar hasn't responded is we haven't seen a response from China yet. So, you know, you got people that are like, okay, well, you know, is China even going to respond? Are they going to do a tit for tat? You know, type of retaliation. I was talking to a friend of mine who is, you know, was looking at gold, and he's like, I think one of the reasons why gold is stronger is because China is going to have to stimulate their economy. They're going to have to, you know, they're going to have to do some sort of stimulation efforts, which is going to be inflationary. So, and with rates going higher, that makes sense. The question is, what do you do with the dollar here? I'm not too sure at the moment what to do with the dollar, because I think we're still range bound. You know, you got the euro dollar pushing up against 117. You know, but you know, does it have enough you know, oomph to push through? And you know, if China does respond, you know, sometime today, will we get a North America response, and will it be dollar positive? That's, you know, because if China comes back and has some sort of retaliatory rhetoric, the dollar could get a boost off of you know, some risk aversion. So you know, it's a tough call right now. You know, I think one of the reasons why you've got the dollar weaker at the moment is just because of the lack of response at this point. But you know, at any moment, China could, you know, some headlines could hit regarding China and what they want to do, and I don't know, you know, I don't know if you really want to be short the dollar if they do that, if that makes any sense.
I mean, the way I look at it, and I was pointing out, you know, last Thursday we saw this formation. I was asking about you, and I was thinking, to me, it looks like it's bearish. And one of the things I looked at is whenever the administration has announced tariffs or talks about tariffs, we always see a pretty good rally. And this is a rally that we saw 2 Fridays ago, strong dollar rally going into the close. And last Friday we saw another good rally, a decent, okay rally into the close. And then now we get the announcements of the tariffs, and we get, what, a 25 tick rally. But we're already below here. So traders that have been bullish the dollar, they're sticking, well, I'm still doing okay. But now with this formation, to me, they're starting to say, well, wait a minute, maybe things are just, I'll wait for the next rally and I'll see how that looks like. And it reminds me of that movie from the 90s, Dude, Where's My Car? Well, you know what, dude, where's my rally? You know what I mean? Now we get the announcement of $200 billion worth of additional tariffs, and we get, what, a 20 to 25 tick rally? So that's what I'm saying, dude, where's my rally? And we're already in a bearish, to me, it looks like it's a bearish setup for the dollar. So I think that we could slip. Another thing that you were looking at, and I did post that in the ForexAnalytix room, and I mentioned it here, which is an ancillary issue. You mentioned about the Italian situation. It says BlackRock Teal says they've moved to a long position in Italian bonds. They've been short Italian bonds, and they went to neutral, and now they're long Italian bonds. And they also like the cable. But now the cable actually reached our intermediate target to the pip. Our intermediate target was 3170 in the ForexAnalytix room. We're looking for 133 with an intermediate pause at 3170. Today we hit 131.70 and a half. But to me, I just feel that the dollar, I don't think it's horrible, but I think that we just need a little bit of a correction. And that's not asking for too much for this market to go in and break lower. So I think that people may start to unwind their positions a little bit. And for the last couple of days, it seems like gold's been I was going to say, and not front running the dollar, but front running expectations of the dollar. So it certainly started to move higher, but we defended that 11.97, and we're kind of holding here. But I think in the next day or two, we could start to see the dollar unwind a little bit further. We'll see what happens, but that's my take on that. I think China's just sitting back and saying, you know what, why are we going to respond tit for tat? We're just going to sit back and we'll wait, and we'll just figure out what's the best move for us to do. So I think maybe they're not going to react so immediately. They may just sit back for a couple of days, and they'll do what they think is in their own best interest, and probably feel that the best thing is no reaction for right now, and then they'll move from there. Whichever way that may be, I don't know, but I kind of believe that I think that the safer bet is actually to sell the dollar.
Yeah, and yeah, I'm not. Again, I'm a little indifferent right at this moment in time. I picked up I picked up the dollar Canadian again just because it's holding up relatively well. You know, and you know, I'm kind of nibbling on the dollar in certain spots, but yeah, I don't know. It's a tough call. Hey Paul, do you mind doing me a favor? Can you cover just for a couple minutes? I have to run and deal with my dogs just for like just a couple more minutes. Maybe cover like the
sure.
Maybe like some of the indices that you don't, or maybe
that's exactly what I was going to go and look into, which is on the S&Ps.
Yeah, give me just a couple minutes.
Yeah, sure. One of the things that was my concern here, and we've mentioned this as a touch just yesterday. Generally, my longer term outlook is a 2-hour chart. And the reason I like the 2-hour versus the 4-hour, because with the 2-hour, you get, 12 different bars in a single day versus, less than half of that, so 6. And one of the things I was looking at, I ended up moving this to 480 minutes just to get a little bit better perspective. And one of the things that I looked at was it appeared that we had a hanging man, because we saw this rally going into the close on Friday. And to me, it's like, well, that just looks like a hanging man, and we may just start to see a little bit further pressure. And certainly that's exactly what we saw. We saw further pressure. Matter of fact, you look now here, you're seeing a little bit of a hammer. But to me, this market is going to have to move above this 29.08. And really, to me, it looks like any type of resistance is going to be right in here to 29.02 to 29.04. But when I look here, I think that the market it's still holding up very well. But my concern has been here with the equities, and the same thing with the dollar yen is, how long are you going to be able to hold? Not that I think it's bearish when you've got yields at these high levels. When we look at the 30-year bond, look at that. I mean, obviously it makes good sense that it's going to be higher rates because the economy has done better, way better. When this is going all back to 2014, where we're still having to take care of the economy, and little by little, the economy has been able to pick up into as employment and economic statistics has done very, very well. And so there's been a less need, obviously high rates, because the Fed has already started to take action. But at what point does the indices take a bit of a pause, and does it get negatively impacted from what we're seeing with the tariff wars? Seen a lot of people talk about, and a lot of business leaders say this is just not good. So you have to go in and wonder, but we're holding up very well so far. But that's my take here with the dollar yen, is that my concern is that if that's the case, we should be a whole heck of a lot higher. The dollar yen had already started to break lower a little bit into the U.S. After U.S. Open and further. We did get some comments out of Japan in regards to the Bank of Japan, and there was some talk about when would they look at about normalizing or adjusting, and we got a little bit of a boost here because they were saying, well, if we were to start to talk like that, it could really throw the market into a tizzy. So, well, I don't know about that, but that certainly did go on and help the market to come back. The market basically ran out of gas close to the same area, which has been our bias chart resistance since yesterday of 1223. But we are starting to see a little bit of weakness in the NASDAQ. Certainly things are still bullish. But once again, like I said, we may see this momentum start to pare back, and I think that you want to go and keep an eye. One of the things that I looked at, and we were calling, I'd like to go and touch a little bit on news, just for a little bit of a flavor or perspective. And one of the analysts, I can't think of his name, with FCT International, was saying, look, gold's not going to be able to move. We don't have a catalyst, barring a pullback in U.S. equities. So right now, gold seems to be treading water. It was able to defend this 1197. I think this has a lot to do with where the dollars. My concern is with the dollars, just be careful. I don't think the dollar's going to heck in a handbasket, but you can, I believe, start to see some long liquidation. And don't forget, the market is incredibly long dollars. A lot of people have also referenced this as a potential head and shoulders right in here. And I think that just to slide back, even if it was just to the neckline, at the very least, you're taking a 94.09, depending on what you see as a neckline, 94.09. I just think that we're susceptible for some liquidation of long positions. And with some additional momentum, that may end up pushing us down here closer to the lower 93. So just be wary of that. My thinking is that the euro may end up getting pushed up by default, and certainly the concerns with Italian bonds is starting to wane a bit. Not saying they're completely out of the woods, but it's starting to wane a bit. So we'll see how that goes and plays out.
Hey, Paul,
holding up.
Oh, I just want to say I'm back. Thank you so much for covering me.
Sure.
Me.
Okay.
Yeah. So I'll go ahead and take over from here. And is there anything else that you wanted to cover really quick?
No, just as I said, when you look at the S&Ps, one of the things I mentioned there, but I usually don't look at anything beyond a 2-hour, but I looked at this 480-minute just for perspective. And you can see here that when we rallied into Friday, we had this hanging man, and that opened the door for this lower move here. And I was already sharing that yesterday, and certainly we did go on and see this lower move, but I'm just wondering, I don't think that the equities are in bad shape, but we are starting to lose a little bit of momentum. And once again, my only concern is that the market is incredibly long dollars, and we could just see just some liquidation. Nothing huge, but that should be enough to give us a little bit of a push and maybe push us out of this tight ranges that you, me, and Stelios and a couple other people were talking about yesterday in the meeting. But I'll let you take it over from here and see what comments you have, because I know we're in these tight ranges with the market overall, and see what you want to reference to. But have a good day.
You too, Paul. Thank you very much.